Hi everyone, welcome back to VinodPechu. It's me, Vinod, back at the studio. Had a good long week in Bangalore. Did manage to record some videos. Unfortunately, I could not manage to meet any of you there. Thanks to the work and running around there, could not allow me time to meet any of you there. Bangalore traffic, rumored to be terrible, in reality is quite terrible. I was spending most of my days 3 to 4 hours stuck in traffic, either one way or the way back home. So I do empathize and sympathize with all of you in Bangalore, especially if your domicile is not near your place of work. It could be terrible going up and down in that traffic. You do have my sympathies. Well, that said, I'm back in Chennai now. Of course, Chennai has its own set of problems, which is the weather. It's getting hotter and hotter. Of course, the monsoon is expected, and a lot weighs on the Indian economy is thanks to the monsoon. If the monsoon's good, our economy is supposed to have a good time. If the monsoon is not so good, then our economy doesn't do so well. I do feel the dependency on the monsoon has slightly pivoted over the years, and it's not as influential as it was before. Maybe I'm wrong, I don't know. I'd love to hear your thoughts on that. How influential is the monsoon to our economy? Yes, I'm not talking about agriculture, I'm talking about the rest of it. Would love for your point of view in that, especially looking at the stocks we are looking at. How do you think monsoon will affect them? Of course, inflation does have a direct effect on our food prices, everything, the monsoon, yes. But I'm talking about the other aspects of our inflation. What do you think? I would love to hear that. Talking about money and inflation, I want to talk about the finance sector and IndusInd Bank. And not only IndusInd Bank, about all other banks. Are we in some kind of a problem? Is there something underlying which we should be worried about? There's so much problem in our microfinance companies, Spandana, Fusion, IndusInd, Ashirvad, Manappuram. All those microfinance units have been suffering for almost a year now, and the NPAs have been rising, and we're saying it's going to take a couple of more quarters for it to settle down. Then suddenly this news of the IndusInd Bank and them not disclosing this derivative trade loss which they have had, and is that the beginning of the fall of something major to come? Well, I would just say hang on a moment. It has happened in the past where banks, due to situations in the market, have collapsed. Famously, the Lehman Brothers or the Northern Rock in UK. Northern Rock was nationalized, meaning the British government decided to take over the bank. Investors were paid a fraction of their investments as a compensation. They did go to court and lose the fight in court. The court ruled in the favor of the government and said, no, you paid the right amount for what was left in the bank. In case of Lehman Brothers, the American government did not step in, and the bank finally collapsed and it disappeared. Of course, that triggered the 2007 financial crisis, and we all know what happened since then. In the case of Lehman Brothers, of course, the shareholders did not get anything. The value of the stock went to zero, and that was the end of that. So the curious case is, a lot of you are wondering, what do you get if your bank or your company in India goes bust? Well, in India, the rules are very clear. If someone goes bust, who gets paid? Well, the shareholders, a lot of you think, okay, I see a book value. So that means if the company goes bust, right, I'm buying it below book value, that means at least I make a profit. I get book value in my hand. Not necessary, because in India, as part of the rest of the world, investors, they get paid last, because we are the ones who get the most capital appreciation when the stock price goes up, when business is good. But at the same time, because of that risk and because of that gamble, we have the most to lose when the company goes kaput. Because like Warren Buffett says, we are investing in the business, we're not investing in a stock, we're not lending them money. We believe in the people running the business, we believe in the business they're doing, and we think it is going to do well, and we invest in that business. So we are actually taking on risk. And that's why it's important to look at a stock as a business and not to look upon it as some kind of small security which you're trading. Though we do say it's a security market and market security. We say all these things, but in the end of it, you are a business owner, and as a business owner, you are saddled with that loss if your business fails, which is true in any business you do. If you start a business today, opening a tea shop, and you're not able to sell the tea, or nobody comes to buy tea from you, you'll run it as long as you have liquid cash. Once you run out of liquid cash, you'll close up shop and say, I tried it and I failed. But then what happens? People who you borrowed money from will come knocking on your door and they'll say, you have to pay me back what you owe me. So then you'll sell whatever you bought for the store and try and pay off your loans. But people who joined in you with the business, like your friends,
who pooled in with you and all of you raised the capital required to try to do this business, they don't get anything back because all of you were going to enjoy the profits when the profits were coming, but your friends will also have to absorb the loss when the losses come. And that is the case when it comes to investing in India. So the people who get paid first are the creditors, who are called secured creditors, people who have collaterals signed in piece of paper from the company saying, if we go kaput, you can take this asset and you can liquidate it and take it back. So those are called secured creditors, such as banks, financial institutions. They can make claim on specific assets, which is allowed legally. So they get paid. Next in line are the unsecured creditors, such as suppliers and bondholders. People have been doing supplies to the business. They get paid second after the first guys are paid off, and the bondholders get. And usually by the time when that is done, there's nothing much left in most cases, and the investors don't get anything. So that's why my brother keeps saying, keep an eye on the debt. Because if a company has a lot of debt, the chances of you getting anything if the company goes belly over is almost nothing. So if the company has zero debt, if things don't work out, then looking at the book value makes sense because there's a chance of you getting something. As long as the books of the company are straight and the owners have been honest, then your chances of getting something is there. So fast forward now to financial companies, which are banks, the microfinance companies. Does this hold true for them? Yes, it does hold true for them too. The same thing applies. But in the case of financial institutions, it slightly differs because what we consider as an asset and what we consider as a liability kind of takes a flip. Because here, the loans the company gives, the bank gives, the financial institution gives, the loans are considered to be the assets. While, the deposits, customers who have deposited money in the bank and people who have bought the bank's bonds, or given bank FDs, those are liabilities because the bank has to pay those people back. So it kind of flips because logically you think, that should be an asset because it's money in the bank. No, it's not. It's not their money. It is the customer's money or the lender's money and the bank has to pay them back. In case of them giving the loans out, I know you think that is a liability usually. That's when the loan is taken by you. But in terms of the bank, that is their asset. That's the underlying business. So when you see a bank's book value, it is the amount of loans it's given out, it's its book value. So why am I telling you this in such great detail? I'm getting to the point of this. So when you see a bank and you say it is having, a bank has a book value of 100 rupees, that means the loans this bank has given out, that is what constitutes that book value. So when that loan which is given out is not performing, it becomes a non-performing asset, an NPA. That means the people who borrowed money from the bank are not paying the bank back. That means it reflects on the book value. And that is where the crux of this whole situation lies. Because it is very hard to say which loans are going to fail in the future. We know the people who have already defaulted. That has been taken into account. And we have set aside some money for that. Fair enough. But next 6 months, next 3 months, next 9 months, who are going to default, it's very hard to say. Because nobody who borrows money wants to default. I know it sounds crazy, but it's true. Not everybody is a criminal. Not everybody has an intention of not paying. Even the most, financially illiterate person or less financially disciplined person has no intent of defaulting on a loan because the social stigma attached to defaulting a loan is so tremendous for a person or a business that no one wants to carry that cross. So most people want to pay it back. That is why it gets very hard to predict what is going to happen in the next 3 months, 6 months, 9 months. So this book value, which we see today, right, quarter on quarter, it can change. That is why the RBI has something known as the Capital Adequacy Ratio, CAR. So what is Capital Adequacy Ratio? Well, RBI, to make the banks more secure, says you must have so much of money, liquid cash, saved in different ways, right, which are allowed by RBI mandate, against the ratio of amount of money you're given out. So let's say you have so much of debt, that means you must have so much liquid cash in your account in some shape or form. So if there's any trouble, the bank has enough cash, liquidity, to take care of the trouble. And most banks in India, I would say all banks, especially the big banks, are well above the RBI mandate. RBI mandates a certain amount. These banks are well and above that amount. Your IndusInd is above that. Your HDFC is above that. Your ICICI is above that. Right? Even your microfinance companies are actually even higher than your banks. If you go look at the capital adequacy ratios of your microfinance companies, those are actually much higher by probably 10 percentage points, 15 percentage points higher than your banks. That means they have a lot of liquid reserves in different shapes and forms to cover this. But like I said, the way your book values, your loans which are given, and the NPAs we do not know. Even in the case of capital adequacy ratio, the liquidity which is stored, we do not know the quality of the liquidity until it's called upon. So it's a very fragile balance. It's like an eggshell, right? An egg, when you hold it from the top to bottom, it's very strong. When you hold it in the side, Rupesh will tell you, it goes crack very easily. So you can break an egg through the sides very easily, but top to bottom, to crush it, is next to impossible because the geometry of the egg. So same way, banks are like that. There are certain things which are inbuilt into them, but certain things we cannot see. So what comes into the question? Will IndusInd Bank collapse? Will, all these microfinance, what you have, will they disappear? No. As of now, where they stand, you don't have to worry about. In the case of even Fusion Finance, the owners, Warburg Pincus, they have said they're going to issue rights. Rights are stocks. We all know what are rights. They're going to open to the market. They themselves are ready to buy the rights, being the promoters, and inject capital into the Fusion Finance company to make sure it's even more money is there for them to do more business and things. They've already got the approval for the rights issue. When the rights issue comes, all shareholders will be asked in the open market if they'd like to participate. Those of you participates in rights issues will be giving money to Fusion Finance, saying, I believe in you as a shareholder, and you'll be getting one more share of sorts while the company raises the capital which it requires. So they're doing all the right things. So the pain is going to be there. Why did Fusion Finance and all this suffer? There are many factors in it. One is they gave people who were borrowing money were not really credit worthy. They were borrowing from multiple, same customers borrowing from multiple institutions. That happened. The other is, of course, there is also social movement in our states, like in Punjab, farmers, loan debt relief, where the government says loans are waived off, and those had a negative effect on these companies because most of these loans were given to farmers and small entrepreneurs and business entrepreneurs of very small nature. These are small loans. So those write-offs happened, which affected them. But if you see the CRISIL rating of these institutions, those are still very strong. They're all A+, they're not in any watch list anymore. So this pain which we're going to feel is temporal, and it's going to take some time for the recovery to happen. So then your question is, okay, Vinod, this is all very great. What can cause, something dramatic to happen in our financial, can cause an earthquake? Where are the fault lines for an earthquake in our financial sector in India? Well, where you should keep your eye, I would keep my eye on, is the NPAs, the non-performing assets, what I spoke about for some time back, where you cannot see the future. So as each report comes, quarterly reports come, keep an eye on the NPA, see what they're saying, see the numbers in the balance sheet, and see the quality of NPAs and who are these guys who are defaulting. That is critical. The defaults should not go up. The NPAs also should not go up. Liquidity should not go down. That means the capital adequacy ratio I was talking about before, that liquidity of the bank either can go up, which is good, or at least it should be maintained, which is important. And where other sectors, like, there's something that happens in the real estate sector, suddenly there's a huge price correction. There's a huge price correction in the real estate sector. That's what happened during the subprime mortgage. Lots of loans were leveraged, kept inflating the property prices in the US to the point suddenly when a lot of loans went default, these home loans in the US went default, that means all these property prices started become liquidated, and that pushed property prices down, and that led to a collapse. And of course, from there it's recovered, but that kind of a domino effect, that can similar like that, something can happen. Or globally in a macroeconomic thing, what everyone is worried about in the US, what Trump and Musk are doing, is a recession. A global recession, a very bad recession, could choke the financial sector as a whole. There, each one has a different level of effect on fault line in terms of earthquake in our financial systems. So you have to keep an eye on all this and see what is happening specifically with your company which you are invested in, and what are the effects on it, what is the exposure to each of these, and see what will happen. Even in case of the IndusInd Bank, there are loans which a majority have given are to vehicle loans, personal loans. So loans are very different where this NPA is happening.
So keep the news, when you read the news, just don't read the headlines. I know we all feel lazy at times and we just read the headline, something Economic Times, some director did some malfeasance. Read the article and see how does it affect the bank, Does it affect the bank operations? Does the bank have anything loss incurred because of this? Or was this a personal thing which he did or she did? So that kind of information helps. Like even in the case of ICICI Bank, the leadership was questioned and the questions were asked, but the bank went on. Even when the leadership transitioned out, the bank went on and it continues going on. So all this matters. How you read the news, how you see the implications of this news is important to understand this. So don't panic when you see opportunities to buy if you feel it's right for you. Yeah, I bought IndusInd Bank, I bought some gold, and of course I bought some Natco, my favorite Natco. I know a lot of you troll me for Natco, saying ha ha ha, your brother said this, you said this, and look at where that goes. Yes, I understand. Have a laugh on my behalf, no problem. If it helps you deal with the problems you're facing in your life, having a laugh at me or taking a dig at me or trolling me makes you feel a little better about your life, please troll me as much as you want. As long as I'm helping you out in some shape or form, you can do that too. I don't mind. I have quite a thick skin, so all this really doesn't get into my head. I wish you all a wonderful evening and a wonderful day tomorrow. Tomorrow's another day, another opportunity to invest all over again. Remember, as I keep saying, do not go drop your wallet in the market. Tiffin coffee range, light snacks here and there, and keep going on. We still have no idea what is going to happen in the US, what is going to happen in Europe, and even what is happening in India as far as all this uncertainty is concerned. Uncertainty and volatility for a value investor is a friend. But it is only a friend if you are investing in small ranges and you're picking your stocks carefully at the right price points and you're taking it a step at a time. If you treat volatility into your system and you panic, you'll start selling things when you don't want to or you shouldn't, and you'll be buying things you should not be buying. In huge volumes, definitely you should not be buying. Anyway, see you tomorrow. And again, have a wonderful day tomorrow. Till I see you tomorrow evening. Bye.